What is the most used mortgage? Buying a home is one of the biggest financial decisions most people will ever make. And when it comes to financing that dream, most homebuyers rely on one thing: a mortgage. But here's the question: what is the most used mortgage in America? The answer might surprise you. Today, we're diving deep into the world of mortgages, focusing on the king of them all, the 30-year fixed-rate mortgage. Setting the stage. In the United States, there are many different types of home loans available: 15-year loans, 20-year loans, adjustable-rate mortgages, FHA loans, VA loans, USDA loans, jumbo loans, and more. But year after year, one mortgage dominates the housing market: the 30-year fixed-rate mortgage. This type of loan consistently makes up between 70% to 90% of all mortgages issued in the U.S. That's right, nearly 3 out of every 4 homeowners choose this option. But why is it so popular? Let's break it down. What is a 30-year fixed-rate mortgage? A 30-year fixed-rate mortgage is exactly what it sounds like. It's a home loan that you pay back over 30 years, and the interest rate stays the same the entire time. That means your monthly principal and interest payments never change, even if interest rates in the market go up or down. This stability is one of the biggest reasons why homeowners love this loan. Why do people choose it? There are several reasons why the 30-year fixed mortgage is the most popular. Predictability: your payment is always the same, month after month. That makes budgeting much easier. Lower monthly payments: because the loan term is stretched out over 30 years, your payments are smaller compared to a shorter loan. Flexibility: you don't have to keep the loan for the full 30 years. Many homeowners sell, refinance, or pay off early. Accessibility: nearly every lender offers a 30-year fixed mortgage, making it the standard option for first-time homebuyers. A historical perspective. Believe it or not, the 30-year mortgage didn't always exist. Before the 1930s, mortgages were much shorter, typically 5 to 10 years, and required huge down payments. When the Great Depression hit, millions of families lost their homes. To stabilize the housing market, the U.S. government stepped in. Programs like the Federal Housing Administration and later Fannie Mae popularized the long-term, fixed-rate mortgage. Over time, the 30-year mortgage became the gold standard, providing affordability and stability for generations of homeowners. Comparing it to other mortgages. Now, let's compare the 30-year fixed mortgage to other popular options. 15-year fixed mortgage: this loan has higher monthly payments but saves you tens of thousands in interest. It's great for people who can afford bigger payments and want to pay off their home faster. Adjustable rate mortgages: ARMs, these start with a low interest rate, but after a few years, the rate can change. That makes them riskier, but some buyers choose them if they don't plan to stay in the home long. Government-backed loans: FHA, VA, USDA, these are designed to help specific groups, like first-time buyers, veterans, or rural residents. While popular, they still don't come close to the widespread use of the 30-year fixed mortgage. The pros of a 30-year mortgage. The 30-year fixed mortgage comes with some clear benefits. Lower monthly payments make homeownership more affordable. Stability: you don't have to worry about rates skyrocketing. Flexibility: you can pay extra toward the loan and finish early. It allows homeowners to qualify for more expensive homes since the payment is spread out. The cons of a 30-year mortgage. But no loan is perfect. The 30-year fixed mortgage also has its downsides. You pay much more interest over the life of the loan compared to shorter mortgages. Because payments are lower, it encourages some buyers to purchase more house than they need. It takes decades to build equity unless you make extra payments. Real-life example. Let's take an example. Suppose you buy a $300,000 home with a 20% down payment. That leaves a $240,000 mortgage. On a 30-year loan at 6%, your monthly payment would be about $1,439. Over the life of the loan, you'd pay over $276,000 in interest. On a 15-year loan at 5.5%, your monthly payment jumps to $1,958. But your total interest drops to about $77,000. This shows the trade-off: lower monthly payments versus paying significantly more over time. Why it's still the king. So why, despite its higher lifetime cost, is the 30-year mortgage still the king? The answer is simple: affordability. Lower payments make homeownership possible for millions of Americans who otherwise couldn't afford a home. For many, it's the difference between renting forever and finally owning their own home.